In the heart of Kuala Lumpur sits the Exchange 106, a 1,615-foot glass monolith that serves as the centerpiece of the TRX development. But behind its glittering blue glass facade, its two shareholders are locked in a dispute. The roots of it go back to 2012, when then PM Datuk Sri Najib Razak launched the multi-billion ringgit Tun Razak Exchange and claimed that the Exchange 106 would be the country's new signature skyscraper. To make it happen, the government invited Indonesia-based Mulia Group to build it, with management meeting Najib himself and other members of his administration. The deal was done based on agreements, assurances, and representations by the government. This came at a time when progress on TRX was hampered by adverse publicity surrounding Sovereign Wealth Fund 1MDB and Najib's connections to it. When 1MDB blew up 3 years later, the scandal eventually landing Najib in jail, its construction faced a stumbling block. All the promises made by the Najib administration to Mulia Group never materialized. By that time, Mulia Group had pumped in 1.2 billion ringgit and could not raise enough financing to finish the project. Faced with the possibility of a half-built tower, the Malaysian government stepped in to salvage the situation in 2017. Mulia Group transferred a 51% stake in Mulia Property Development, owner of the Exchange 106, to Ministry of Finance subsidiary MK Signature. The MOF then acted as a loan guarantor for this private project. It was enough to get it over the finish line. The Exchange 106 was finally completed in December 2019. Now, 4 years on, MK Signature is seeking a court order to take over the 49% stake held by Mulia International, filed in May of 2024. Under the shareholders' agreement, the MOF was never meant to be a long-term shareholder. The agreements included a call option, a future promise from Mulia International to buy back the 51% stake. The Indonesian party had to buy back MOF's stake at a predetermined price, which ranged from 100 million if exercised within 2 years and 200 million ringgit if exercised within 2 to 3 years. Mulia Group did not exercise its call option. The parties tried again, entering into a supplementary agreement in 2022 to extend the call option to June 26, 2023, with a price tag of 250 million ringgit. The date came and went. Now the government is taking the Mulia Group to court in a bid to get back complete ownership of Exchange 106. However, Mulia Group is not going down without a fight. It wants the matter to go to arbitration at the International Centre for Settlement of Investment Disputes and calls the Malaysian government's latest move tantamount to a breach of the ASEAN Treaty.